Well, look, I didn't anticipate the correction, so I wouldn't be an expert on whether it's done in the short term, right? But my sense is that the earnings that you're going to hear in October, the conferences that all the institutional clients are attending now and next week are going to calm people down, that the earnings are far less volatile than the price action that preceded it. I think the risk reward skewed to the positive. You know, when stocks go down a lot, and I don't think the earnings outlook's that altered, I tend to get more bullish. So I was optimistic before, and I'm optimistic now that the market will be higher.
Hasn't China altered the earnings landscape?
It has. You know, we're underweight industrials, we're underweight materials. I don't think you can inoculate your U.S. portfolio from China exposure, but you can try to, you know, hedge against it or play around it to outperform the index.
So I'm sure that this is going to have absolutely no impact on the actual value of stocks, whether they increase in September or December, but I think it could move some stocks. And so what you want to be on the lookout for is some interest rate sensitive stocks that become attractive. So there's a name like KKR that tends to get hit when interest rates go up, even though it has virtually no impact on the business. There's a chance KKR stock might go down a fair amount if the Fed increases. On the other side, if rates do stay flat, you might have some yield-sensitive stocks like REITs trade up. So I would recommend, since we think those stocks are already overpriced, it'd be a great time to sell those stocks, as well as any long-term bonds you may still own. Whether it happens in September, December is completely irrelevant. But because there's so little liquidity in the market and the Volcker rule, stocks are going to move more than they should. So these rate-sensitive stocks are going to move. If there isn't an increase, bank stocks, which have been going up in anticipation of an increase, are going to probably come down. You want to take advantage of that because this just doesn't have any impact on the profitability of these companies.
I'm not going to say it's the biggest, but I do want to say that it's been diminished. And why do I say that? Geopolitical risk has never been higher, but oil at risk has never been lower.
Why do you say that?
The reason why I say that is we look at Libya, production's off. Look at Iran, production is already diminished because of the sanctions. Nigeria, production's been ravaged since 2004. Venezuela, the list goes on. We look at who's growing production in the region. It's Iraq, and it is Saudi Arabia. Security in Iraq was proven to be quite strong when ISIS went down and tried to go into the south. Lots of JVs and production is protected there.